we have another special guest here to talk about CTLP. CTLP was a VIP pick by Money Mark Gomes, who gave us a presentation on that. They had earnings last night. So, Mark Gomes, welcome to the show.
Hey, how you doing?
Doing great, Mark. CTLP, always on our watch list, is one of our VIP picks since you presented it. I like the story. They had earnings yesterday. Why don't you give us a quick update on it?
Yeah, so it was a good quarter. They beat on the top line and bottom line, 58 million versus 56.3 expected. They gave guidance that was in line with expectations for fiscal 23. This was their last fiscal quarter, so that's typical of what they do. They're good management team. The chairman of the board comes out of JP Morgan, was the CFO and the head of M&A for JP Morgan, so he knows the game as well as anybody for a company this size. So that was all positive. I'd say that it was all systems go. They have new modules. They're expanding their product set. They're expanding their ability to sell. Yeah, so this is just a great company overall, right? This is really just, if you think about SAP or Oracle, what they do for corporations, this is what Cantaloupe does for unattended retail, both looking at vending machines, EV charging stations they're getting into, and the like. The other big news that may have been unsettling for folks initially in after hours was a CEO transition. From Sean to Ravi being the COO. Okay. On the call, it seemed pretty clear that this was a planned transition. Okay. Ravi thanked Sean for his mentorship in preparation for this role. It was said on the call that Wall Street is very familiar with Ravi, and this is the little clue that I really liked, is that Sean was lauded for turning the company around, and that with the turnaround complete, that they were handing the reins over to Ravi with all of the growth initiatives that Ravi has put into place, making him the obvious choice to be the new CEO. So, the takeaway here is that the company is now signaling that the turnaround is complete, and now they're going to focus on expansion of revenue and margins.
Great. I got one question for you. If you look at valuation, I love the story. I hear a lot of good commentary from other people in the community regarding management and this conference call. But if you look at the PE or EBITDA ratio or whatever, like the adjusted EBITDA ratio is like 38. If you use the adjusted number, if you use GAAP net income, it's much, much higher. So superficially, it looks like it's not necessarily that cheap. What do you say to someone who's like me, who's looking at it superficially?
Yeah, so first of all, you can look at Wall Street estimates, and they're much higher in terms of what the price target is. And the secret sauce to the way I do things personally when I'm valuing a company is not looking at the current operating margins, but what the operating margins should be in the future, right? And that's why a lot of people look at price to sales ratios, right? Because it's a quick kind of cheat code to say, oh, well, if the company's selling at 1 times revenue, then it's cheap. Well, I like to look one step deeper and say, where are the operating margins going? So when you look at a company as dominant as Cantaloupe and what they're doing, and the future they have in front of them, having locked in so many customers and now focusing on potentially doubling the average revenue that they get per customer over the following several years, most of the revenue that they get, most of the increased revenue they get from customers drops straight to the bottom line, leading to operating margins that could exceed 20 or 30%. And if you look at like an SAP or Oracle got up to over 50%. I'm not saying that's happening here, but it's just an example to where if you take the operating margins of Cantaloupe and take it to a more normal level for a dominant player in a software-related space, you could see that this company's stock could, has the potential to go into the 20s before too long. And I'm not saying, this year, but, a couple years down the road, we could see this looking at a $20 stock.
Okay. Is this wait time or gold mine?
Oh, this is most definitely gold mine. I mean, they're already profitable. They're beating estimates. This is not a typical money mark pick in that it's already prime time. This is a growth name that's known by Wall Street as GARP, growth at a reasonable price. So this
Okay.
is one that you
I'm looking at the headlines here from Benzinga. At least it says company reported mixed results, inline guidance. Do you see it differently? Is it inline guidance?
I think I don't. Yeah, it's definitely inline guidance. I
Yeah.
don't see that as mixed results because if you know the company, you know that they don't provide.
Oh, they're saying
above.
mixed results. I see it down here further down. It says mixed results because the EPS was I guess the GAAP EPS net income was -3 cents versus a -1 cent estimate, and then the top line beat by $1.5 million, 1.7 million.
Yeah,
That's why they're calling it
I'd have
mixed.
to I'd have to double check that because that's not the EPS estimate that I had for what
Okay.
they reported. I
Yeah,
had
that stuff isn't always accurate.
I had -3 versus -5.
Okay. All right. So add it all up. Compared to your expectations, was this something that net is impactful enough for you to say, hey, I may want to increase my position here, or just status quo?
Yeah, I mean, look, they made progress in the quarter. The company is doing exactly what I would have hoped and more because they're beating expectations, right? Stock is trading for the same I recommended it for a few months ago before it went from 550 to nearly 7, right? Now we're back to I suspect that maybe word of Sean's departure leaked out and people didn't really think about why he was departing. Personally, I see this as bullish news. They're getting rid of the turnaround guy, right? They're shedding a member of the management team, and they actually brought an incoming CIO who's known for expanding product sets. So that was the swap that they did. So they swapped somebody who needed to turn things around, fix things, for somebody who's known for helping to grow things, right? And the stock here is back to where it was where I originally picked it. So the stock may have pulled back with a leak on Sean's departure, and I think that was the wrong move. And as you can see in pre-market, the stock is showing strength relative to yesterday's close.
Yeah. All right. Awesome. Thank you so much for the update, Mark. Where do people find you again?
What's that?
Where can people find you? Money Mark Gomes, or what's your
Money
website?
Mark Gomes on Yahoo. Or Mark Gomes Stocks with 2 S's in the middle. Gomes Stocks at .wordpress.com.
All right, great. Thank you so much, Mark. Appreciate your time.
Thanks, Ben. Take care.
Yep. Take care.